Cool. Let's kick it off. First big question that I really enjoy asking everyone is, what was your first experience using stable coins? What drove it? What was the light bulb moment? Either of you can jump onto that one first if you've got an interesting first experience with stable coins.
Yeah, I can kick off. I think my earliest experience with the stablecoin was probably me not even realizing I was getting into the stablecoin. It was kind of born out of the earliest use case, I think, which was just how do you get out of these volatile assets that you're constantly trading and hold something a bit more stable before you do your next degenerate activity. So and that was kind of it. It was probably just buying something and then not even realizing on the exchange that the pair wasn't even USD, but rather USDC or USDT that I was trading, and then moving that to like another exchange to buy something else or into a wallet. Yeah, probably like everyone else.
Yeah.
It's probably the first use case.
Yeah. Okay. So when you say unstable asset, you're not talking about an alternative fiat currency. You're talking about like degen stuff.
Exactly. Yeah.
Nice.
Buying crypto that I should probably turn that into buying.
Cool. Well, yeah, that's most of it for me. Cool. Issa, what about you?
Yeah, man. I think for me, very similarly, I think I was buying a token or meme coin for the first time. My reaction was just, yes, I made some money and now I want to get out of this. And I guess USDC was the way to kind of just hold it and not be worried anymore.
Yeah, makes total sense. That's what they were originally created for, right? So yeah, definitely. Awesome. Oh, sorry.
Oh, no, exactly.
Yeah.
Exactly.
Nice. Cool. Well, from a 30,000-foot view, before we sort of like focus in a little bit, stablecoin markets rapidly evolving, especially the last few months, really palpable sense of that. What are you guys finding like on the actual side, building out the product? The biggest challenges that you as a project, or even like more broadly, stablecoin projects generally are facing in bringing a stablecoin product to market?
Yeah, it's a good question. I guess there's a few ways of slicing it. I think that the breadth of stablecoin products is continuing to just show how much more breadth it can have. I say that generally, at least in the context of kind of cross-border payments and using it more in this like kind of B2B context, I think one of the bigger challenges is the coordination portion of it. Anytime we talk about how impactful stablecoins can be in the context of B2B payments, I think that the natural challenge then is how do you actually get both sides to agree on how to settle this transaction? And, for a really long time, you could think of Swift and cards being ways to achieve that coordination. And obviously they work because they are still used quite extensively globally, but at a cost, right? You got the slower speeds, the dollar limits, or even some of the higher fees. And while stablecoins are a really great alternative to achieving that sort of coordination or consensus between two counterparties, the challenge is that, not all businesses globally or people are able to either agree on, hey, I'm going to pay USDC on Ethereum and you're going to accept USDC on Ethereum, maybe let alone one side not even having or being able to hold the stablecoin for some reason. And so that kind of being a challenge is that, ultimately, and why maybe one business or person maybe want to receive or hold the stablecoin could be, how do I reconcile this in my accounting? How do I hold this and be able to recognize this as revenue in kind of the grander scheme of my assets for the business, et cetera? So I think generally it's how do we just continue to make this work within the ways businesses already kind of have process and workflow? How do we make this work in the sense where it will break when one person wants to, receive one way, another person wants to pay or receive in an alternative way? And so I think broadly, it's meeting businesses where they are, regardless of whether they adopt or don't adopt. Because I guess there's this other thing where stablecoins can be really strong from an intermediary sense where, maybe both parties in a transaction maybe don't want to receive or hold stables, but leveraging stables as the intermediary currency can help connect those two currencies better maybe than Swift could. Maybe that's regulatory arbitrage in some sense today, but helping that move faster and cheaper across those two currencies. And so really, again, just how do we continue to find ways to make this work within the schemes and processes that businesses and people can already have? I'd say I think that the challenge that we just need to continue to work on.
Makes ton of sense. Definitely. That touches on something I wanted to dive in a little bit deeper with you guys with a little later on, but it seems like the right time for it. Like your observation around connectivity and really bridging the gap between the Web3 space and the Web2 space, being a facilitator to actually allow stablecoins to compete on the same playing field, and not forcing people into a specific ecosystem, is really integral to sort of the growth of the market. The one thing that I noticed when I was digging around Acctual is the ability to invoice in a stablecoin, have the payout in ACH, and have it deposited in crypto if you want. Like, that flexibility is really, really interesting to me. And I'd love to sort of double click into how Acctual is connecting the Web 2 and the Web 3 rails to drive innovation a little further. If one of you guys could talk to that a little bit.
Yeah, definitely. So I guess kind of to what Atikh was touching on earlier, one of the biggest challenges, and I think things that will accelerate the adoption of stablecoins in general, is that idea of flexibility, where it's very uncommon for a business to be interacting with another business and they're not Web3 native, but both of them wanted to use stablecoins as the settlement currency. So we have this kind of approach we're taking where we're creating the most flexible invoice in the world, where the invoice issuer only defines what they want to receive, and then the payer can pay whether it be in fiat or crypto or a particular stablecoin on a particular network. And we're doing this by leveraging a number of providers, where on one end, we're helping someone either on-ramp or off-ramp the stablecoins. And then on the opposite side, we're doing whichever the person prefers. So we work with a number of different kind of banking or fiat providers to do this. And there's kind of a distributed set of them all around the world, where there's kind of on and off rampers in specific geographies that let us go into stablecoin, and then on and off rampers in other geographies that let us get out of this thing.
Yeah, that's so interesting. There's this quote that I think about a lot, like when I'm thinking about stablecoins and adoption. And I'm going to butcher the quote, but it's from this guy named Alan Watts, is like a philosopher. I don't know if you know him or not, but like basically he was saying that like when your eye is working well, you don't notice your eye. Like, you only notice your eye when something isn't working or there's an irritant or something along those lines. And I often think that stablecoins are much the same in that, like, when adoption hits or as adoption grows, the real magic will be that it fades away into the background, much like money does right now. You really only notice these friction points when they emerge, but when things flow seamlessly, it just becomes part of the process. And yeah, I'm wondering if that's sort of the model for how stablecoin growth and adoption eventually manifests. You know what I mean?
Yeah, definitely. And I think kind of one way we see it, and there's a lot of parallels in that quote you shared, is that people kind of just want to receive value in the place that they're used to receiving value. So whether that be a digital wallet, whether that be a bank account, etc. So they really only want to interact with the thing they know and trust. And to them, if the sender is paying in stable coins or something else, it's kind of irrelevant. They just want the value to be received where they're used to holding it.
Definitely. Atikh, anything to add to that one?
No, I totally resonate. I'd say the only thing I'd add is just that when you think about even the UX of card payments and how that's kind of evolved. I remember at one point you'd be on the web and a certain website maybe wouldn't accept an American Express payment, or even just the experience of needing to select the type of card it was before you could even fill in the remaining details. But it's almost like even nowadays, Stripe and a lot of other GSPs have done a really good job of just extracting that experience in a lot of senses. But I mean, even just the idea of like typing in your card number, and it's just like, we didn't even think about that. And the person receiving it's not, worried about whether they got a MasterCard payment or Visa payment. They just got paid. And so I think that, we're really due for that type of experience soon. And like you said, kind of just weaving it into the fabric of everyday life effectively and how it works.
Yeah, I totally agree. It seems like we are ripe for that as well. Yeah, it seemed like for a long time we had technical problems or like technical challenges to overcome, and it again seems like those are being solved, and now we're just like at a point where it's more of a UX issue than anything, not than anything else, but it's becoming more of a UX issue, which is like an indication that it's maturing, I think. Very cool. Yeah. Okay. Well, maybe we could jump into a typical flow for everybody to understand where the like major friction points exist now in a traditional Web 2 cross-border invoice invoice flow, and how Actual is bringing that or reducing the friction points at that. Like what does it actually look like if I've got a small business in the US and I want to pay contractors abroad to get a job done? How would that look like if, absent these solutions?
Yeah, certainly. Certainly. I mean, there are quite a bit of options for getting that job accomplished. But what we find, and even in our own experiences at running Acctual and paying vendors abroad, some of those traditional methods, will fall short, right? We've had experiences where Swift payments get lost for a number of days and even weeks, or other times where, we aren't able to pay easily into the local currency of someone that wants to be paid by us. And I think that we aren't, unique in experiencing some of those pain points. And so I guess, yeah, kind of an example of a business paying a contractor abroad, there's kind of two examples of that. One where maybe we want to pay in a stable coin, and then we can leverage the actual infrastructure to be able to pay out in a local currency for that other person without us needing to hold or transact with another platform to make that happen, like a Wise or something like that. And then, there's the other alternative where maybe we want to pay with our local currency, pay that wire out of Mercury or whatever else that we normally would, but, leveraging stablecoin rails, we can actually make that transfer happen into the contractor's wallet without us needing to sort of hold or send a stable ourselves. And then kind of the last example is more of what, we hear of a lot of these days, which is sort of the stablecoin sandwich example, where we're able to pay with a local currency here in the US, like dollars, but bypassing Swift, we can actually pay out the local currency, like let's say like Naira, for example, but leveraging stables in between to sort of bypass Swift and make that transfer happen a lot more near instantly. That's like kind of the three different kind of flavors or flows in which we can enable through Actual. But in every case, it's just how do we enable the utmost flexibility and at the same time, hopefully can meet the preferences of both sides of that transaction, and it ultimately help that happen a lot faster and cheaper than it would have.
Awesome. Amazing. Yeah. I haven't actually encountered that problem myself, but just reading through one of your blog posts about, all of the different intermediaries that touch a cross-border payment, really it seems like it's very ripe for disruption. And it's one of the use cases that everyone seems to have talked about in the past for so long. It was such a clear use case. So it's really awesome to see you guys executing on that and producing something that people are using broadly. Nice. I guess the other thing that I'd be really interested on your take is stablecoin adoption seems to be driving forward very robustly at this point. But I'm wondering what are the things that are really going to accelerate this to the mainstream? Is it a function of we still need increased regulatory clarity? The Genius Act just passed. There seems to be a friendly regulatory environment. Is it better UX? Is it better education? Or is it literally an issue of let the industry cook now? Because we've got the table is set, and now it's just an issue of attracting builders like yourselves to the space to start building solutions.
Yeah, definitely. I guess from my perspective, or from our perspective at Actual, one of the biggest kind of barriers here is the flexibility, which is this point that we keep kind of hammering in on. But when we think about even just in Web3, if you want to transact with someone, you guys have to agree on which chain it's on and which token you're going to send, whether it's USDC or USDT or DAI, etc. So even within Web3, there's this issue of I want to send someone stablecoin, but I have to make sure they have a wallet on this chain that they're actively using. I have to make sure that they're comfortable receiving Tether instead of a USDC. So I think that's one major point there. And another would definitely be letting half of the transaction or part of the transaction leverage stable coins because they want to, while not necessarily forcing adoption on the receiving side, for example. And this kind of takes away that chicken and the egg problem where people are playing this game of, okay, so for stable coins to be used, people have to be using stable coins. And it kind of rips that argument or that friction out of the equation.
Definitely. Atika, do you have anything you want to add to that?
Yeah. I mean, I guess generally it's just that I think that the Genius Bill is a phenomenal, tailwind for regulation in the U.S. And I think that the confidence for businesses. I think ultimately there's always kind of going to be a little bit of this kind of like psychological elements to leveraging kind of new payment rails or emerging technologies, and how regulatory clarity can always bring more confidence. But at the same time, I think that what we're finding is, and for our user base, right, like over 60% of our users are actually outside of the US. And so, when we think about regulation, it's almost kind of like, oh, that'll be great. But at the same time, I don't think that we're, hedging our bets or waiting around for, a government body to tell us, whether or not our business will be relevant. Because around the world, what we're finding is that businesses are turning to stablecoins because they have no other options. And so as much as barriers exist in terms of the payment flows, in terms of the use, and from regulation, at the same time, it's also just about urgency and how much of a pain point this can solve for businesses around the world. Like, I think one example that's really interesting is, take a multinational business paying suppliers in parts of Africa, where in some markets, stablecoins actually trade higher than the official USD. So for that multinational, paying in USDC could mean spending less. And with enough savings, all the barriers sort of stop mattering. And so it's almost like when the need is clear and the upside is obvious, businesses move. And when it's not, any one of those barriers become the reason to wait. And so I think that the urgency is really developmental, and in a lot of ways. And I think that's what's been the driver for a lot of the uses that we see today. I think, quite honestly, going to continue to be that as well.
Yeah, I think that makes a ton of sense. And in a lot of ways, I think, regulatory adoption, institutional adoption is a bit of a case of the tail wagging the dog. Like, I think that sense of urgency probably drove adoption by default. And there's a sense of this is coming. So we'd better get our arms around it and integrate it, because otherwise it could eventually evolve into something that represents, an actual competitor or threat, right? Which is awesome, which means we're doing our job in crypto, as far as I'm concerned. Yeah, no, that's great to hear. Nice. I apologize. We're a little like all over the map in terms of the initial questions that I had sent you guys, but I've been sort of organically going as it goes. I realized that I actually wanted to talk to you about the story of Acctual itself, how it started, how it founded with you guys. So if we could spend the last couple minutes chatting about that before we close out, that'd be awesome.
Yeah, definitely. I can kick this one off and then I'll pass it to Atikh because I'm sure there's some details I'm forgetting. So there's three of us kind of that started Actual, myself, Atikh, and our third co-founder, Momo. So actually, Momo and I had met in Seattle in 2020, where I had just moved there to get a job at Google. And it was COVID as well. So it was just like a weird time and hard to meet people. But Momo was kind of a pillar of his community and grew up there. So really made that transition easy for me. And at the time, Momo worked at Stripe, which Atikh also looked at. So they knew each other from there. But Atikh was based in New York. So in the summer of 2021, Momo and I traveled to New York to go kind of hang out there, enjoy the summer, and also meet Atikh. So we got there, we had a bunch of fun, and then towards the end of our stay, we decided to maybe start thinking about, I don't know, what should we do in our spare time aside from going to restaurants and comedy shows. So yeah, we crashed with Atikh for a bit as well, and I think that kind of helped accelerate things. We started just kind of jamming on a bunch of different ideas and things we thought could be interesting. A lot of them were more consumer facing, but after a bit, we kind of started to realize that all three of us, Atikh and Momo at Stripe, and then I was working on payments infrastructure at Google. And we kind of realized, why are we doing consumer stuff when all of us work in kind of B2B payments or that space? And then also it was a hot time for crypto, and yeah, the stable coins were picking up in volume as well. And it was just kind of obvious to us that this was something that could definitely be beneficial for businesses, particularly globally, where the transfer of value is the most difficult. So yeah, we had a bunch of conversations with a bunch of Web3 finance people to kind of understand pain points around using stable coins in their stack. And that's kind of where we started. I'll let Atikh chime in because I don't see his
Nice.
what else.
Yeah, no, that's a really good summation. And yeah, I mean, honestly, just been jamming on this since. I mean, yeah, the earliest kind of iterations of this really focused on this kind of beachhead market of like very crypto native companies. And, we were trying to sell to all the foundations and protocols and smart contract auditing firms, Web3 design agencies, so on and so forth. But the moment we, kind of brought our invoicing product to market, we started to see, just users that were not Web2 native, but businesses in other parts of the world. We were seeing Brazil to Kazakhstan, invoices, and we're like, wait a minute, this has nothing to do with crypto. Like, what's going on here? It's almost like that was the aha moment for us a little bit, where it's like, yes, there's a need for better payment rails, better invoicing products for businesses globally. And yeah, I mean, that's what we do all of our days and nights, weekends, trying to, and still so much to do, but yeah, really excited about kind of landing here.
Nice. Very cool. And just sort of anecdotally, how are you finding, in terms of percentages, your Web 2 versus Web 3 clientele? Like, has it been pretty consistent? Has it changed over time? Like, what percentage breakdown between the crypto natives, the foundations, and the Web 2 businesses that are just looking for a better solution?
It's a good question. I know that this is data that we've pulled at some point, but I can't remember the specifics. But I will say generally what we're seeing is that it's shifting. It's definitely shifting. It's also becoming a lot more kind of USDC, USDT, honestly, a lot of USDT, especially globally on product. And I mean, the use cases are just so varied, right? Like we've seen like English tutoring services. We've seen, shipment of goods that have nothing to do with crypto. We've seen, different types of admin, tax, accounting types of services, purchases of cars. It's such a variety of types of use cases. And I think that, now what we're doing is our own efforts to try to find more businesses globally that transact cross borders that could benefit from this, as opposed to sort of where a lot of the outreach that we do now is very, kind of online native, and maybe businesses are searching specifically for solutions around stablecoin invoicing. But now, how do we start to reach businesses maybe could benefit from the settlement time and lower costs, but maybe not specifically searching for this type of solution as well?
Yeah, makes sense. Awesome. Cool. Well, we're just over the half hour. Last quick question for you guys, if you're good with it. What's next for Acctual? Any updates, alpha things you guys want to call out before we say goodbye?
Yeah, definitely. Kind of what's most exciting and what's I guess most is going to come up the soonest is just more local pay and payout support. So just letting people that may not want to receive crypto still be able to kind of take the benefits of the lower transaction fees, the faster access to capital, etc. And so a couple markets we're really excited about are India and Brazil. So really looking forward to having local pay and payout support in those regions. And aside from that, just improving the product experience, making it faster, making things look nicer and feel better. But yeah, Atikh, anything I'm missing there?
No, I'm definitely excited about that last one though.
Nice. Yeah, India and Brazil, they're like top 10 in like the top 5 or top 10 crypto adoption rate. Is that, I think you guys probably have better data on it than I do, but I remember that coming up recently when I was looking at some stats.
Yeah, for sure. And they definitely both come up in a lot of the lists. I think Chainalysis had both of them in the top 10.
Yeah. Amazing. Well, perfect. Listen, thank you both for joining. It's been great. Fantastic conversation.
Yeah, thanks for having us. Really appreciate it.
Yeah, definitely. Thank you for having us.
For sure. As a reminder, Actual is building a global invoicing platform based on stablecoin rails. Yeah. And we do this every Thursday. So thank you for joining. Appreciate it, Atikh and Issa. You guys have a fantastic week. Enjoy the weekend coming up. Are you going to be in Cannes? You guys coming out to France?
No, not this year, but maybe next year.
All right. Nice. I like it. Fantastic, guys. Have a good week.
Thanks, man. You too.
Cheers.
Okay.